Hello traders, this is Okane here, and just took a trade, but I wanted to just uh, talk about recent price here on Euro USD, just show you a little bit. The things I also shared in the Skype group, so if you haven't joined yet, make sure you do that, and so you can also participate in our trading discussions here. As you can see, I shared this line 3 in the morning my time, but you can see it. It was when price was here. So you see the price continued after that and also reached my target here. I'm not sure if you can see this, but I'm gonna show you the big picture here. As you can see, I shared this line in the Skype group. That's why it's good that you're there. Even though we're not a signal service, you get lines like these. And then later on, as you can see, price continued up to my target at 1.10, 120 approximately. Here's, as you can see, the big drop here as I was expecting price to reach. As you can see, it did reach and gave us a good trade. Unfortunately, I wasn't here, but again, this is why it's good that you are with us in the Skype group, so you can copy these lines, these analyzers, and if you learn some price action, you can do the trades yourself without me being there, without anyone giving you a hand. So as you can see, I predicted the target, and I gave you the supporting trend line. So let's see what happened after that. In the Skype group, I know some people took the trades afterwards when I was gone. So as I said, this was 3 in the morning, so I had to go to sleep. And when I came back, I got up quite late, so I missed these ones. But I took a trade here as price was falling because it's simple. How did I know? I just look back. I see the resistance here, the big drop here, resistance here, resistance, and I see some support here. Bullish candles here, so it was kind of easy to expect price to reach this area once again and give a good call option. So I think I took about 20 minutes, 20-minute expiry, so closed on this bullish candle here on the 15-minute time frame. Yeah, this candle here. So if we look at this chart, my first trade during this week, on Monday morning. Monday morning. So the first trade down here at the support, again, price action. I look back. A call option, the first one. As you can see, the line is a mix of both candle openings, candle closing price, and candle wicks. So it's always a mix. So it's always a mix regarding whether it's regardless of whether it's a candle, it's a trend line or a support resistance line. It's always a mix of candlestick bodies and candlestick wicks. You can see this here on the trend line as well. You see the candle wicks, and then candle bodies, because I try to adapt it so that as many candles have touched it as possible, because that's stronger. And so you get a mix of candlestick volume, candlestick body, candlestick wick. So again, the first trade was here. The second trade, as soon as I saw price moving up, I thought we're gonna get a double top. As you can see, a high, a low, a high, a low. So I was expecting this price to come up, touch. So I had a trade here. Let's see if I have this on a picture. I don't have all of the trades, but I have a picture on this one. Yeah, it was almost 5 in the morning, so a few hours after. Sorry, this was the day before. Yeah, so it was about 5 in the morning. As you can see, I got at the peak there, so perfect entry at the black dot here, as you can see. So it expired in the money, about 15-minute expiry up there, based on previous price action, as you can see. So this is the 30-minute time frame. So we go down to the 15-minute time frame, you can see it actually. So at the touch here that I entered on. Then obviously it was 5 in the morning, so I couldn't be here for the comeback here. But I couldn't have known that price would turn here, because in order to draw this trend line, you need at least 2 touches. So this trend line, I placed it here when I got, I think, the third touch. Second or the third touch. Yeah, I think it was after the third touch, because once I was back here, this had already happened. So yeah, that's when I shared this line in the Skype group as well. As you can see, it was 3 in the morning the day after. So, and after that, as you can see, price continued to bounce off of the same trend line. So again, if you pay attention to price like this, as you can see, there is no need for any indicators. You can use stochastic for your entries, because that's good when you are about to enter at a support or resistance. You can see whether there is a convergence or divergence, and I will show you that in a moment on this trade here. So let's actually do that. Let's plot a stochastic oscillator, 533. And if we go to the hourly here, so some of you might have jumped into this trade already up here, as you can see, based on previous bounce here and bounce here and resistance here. So you might have thought, why shouldn't I jump in when this candle was coming down? First of all, it was a large bearish candle. I don't want to jump in unless it's about to really close, and it was about 10 minutes left, in fact 15 minutes left when it was bouncing here. Okay, so it was 15 minutes left to this candle to finish, and it was already bouncing off of this line that I just drew. Let me change the color so you can understand which line I'm talking about. I hope it's clear. Okay, so it was already bouncing on this line, but I waited because I wanted the hourly to be as close as possible to the closing time, okay, which is at full hour, obviously, because this is an hourly candlestick. So moving down to the lower time frames, you can see that, by the way, look at the hourly was oversold, 30-minute was oversold, 15-minute was oversold, and 5-minute was also oversold. So that's a good indication. That's what stochastic is good for. So my entry was here on this candle that touched on this line, and if we look at the hourly, I think the 30-minute time frame was not entirely overbought. Yeah, that was what made me wait a little bit, because everything else was oversold is what I meant. Everything else was oversold up here already. Okay, so everything was oversold up here except the 30-minute. This 30-minute candle was not finished, so it was not completely oversold. So in this case, I wanted to wait, because first of all, I knew we had this strong resistance, because I remember I took a trade there. I took a put option there before, so I remember this line. I already had this line. I didn't need to draw this line. I already had it based on price action. So even if I didn't have it, I could have looked back and I would see the price action, the strength here, and also the candlestick, the hourly candlestick. When it's a large candle like this, it's the first one large candle like this. You want to wait for it to be as close as closing time as possible. So when it crossed this line, there was around 5 minutes left. So when it dropped to this line, then I knew, okay, it will most probably close above this line. And if it closes here, it will bounce back to this line. And this is exactly what happened. It bounced back to this line, even crossed it for a brief moment here. So that's price action trading. That's how I look at the chart. That's how I analyze the charts, look back often, try to locate important areas, and also pay attention to the candlestick. You don't want to just jump in because you think there is a support. As you can see, the timing matters as well. So I knew There's a large hourly candle. I didn't want to jump into it in the middle of it, because this is what happened if you would have jumped in. So you want to wait for the momentum to finish, and as soon as this candle closed, everything was oversold. A good indication that the market was done with pushing the price down. And then also you had a bounce down there. There was a bounce, and I entered at the bounce here. So I think my price entry that I got with my broker was actually up here. So this is the price I got at 799. So as soon as it bounced here, was pretty good, and there was just, I think, about 4 minutes was left. Yeah, this is the 56. This candle finished at 56, so there was just 4 minutes to full hour to the hourly candle to close. So that was a good indication for entering. So it saved me from entering up here. If I had entered up there, I would have probably still won because this candle closed above it, but it would have been risky. So it would have been a matter of luck. But entering down here saved me, gave me a lot of leverage. So that's all. I wanted to share with you this so you can understand how I go about analyzing. So first is the price action, is the candlesticks and the lines, and the indicator, stochastic or EMA or whatever, that comes last. You don't focus on stochastic by itself or any indicator by itself. You first analyze it. That's why I have an empty chart like this, a naked chart like this, so I can do these analyses. And then I have another one with stochastic and EMAs. Okay, that's all. Thanks for watching. Don't forget to subscribe and like the video or share with your friends. See you later.